The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
Welcome back to another edition of the Daily Dots here on Monday, July 7th. Hope everyone listening from the U.S. had a great Independence Day weekend, back at it. Coming to you from the Casa and flying solo today. Zach and I are both kind of like out of the office for a good chunk of the week. Working, but out of the office. So when it comes to dots, it'll be one of us, both of us, and maybe even neither of us the rest of the week. So fair warning, if you see a day where there's not an upload, it's just because we were out of the office doing other things. But I did want to catch you up today. Just too much going on with the trade war stuff to skip over today. So I'll run through markets, talk about the trade war stuff, probably keep it pretty tight. It's a very, very low data week. Honestly, you could skip all data this week and it wouldn't be a big deal. So from that standpoint, makes these maybe even shorter and easier for this week. But S&P closed down about 0.8, and I'll explain why. Honestly, I think today relatively mild given the news, in my opinion. NASDAQ 100 down 0.75, small caps down 1.5. So the cute outperformance we were getting from small caps versus the market kind of probably about to evaporate. Equal weight down, same as the others, about 0.8. Max 7 down over 1.5. That's mostly Tesla. All world ex-US down 1.2. I've been kind of warning about dollar and getting the ex-US trade having what I think will probably be a pretty significant pullback versus the US. And that may have started today. And you had the dollar up 0.57, so a pretty big move on that. I expect that to continue personally. Oil up about 1.4, somewhat surprising to me given OPEC Plus over the weekend. But they've essentially told you, like, hey, in the next 3 months, we're just back to no voluntary cuts, which means you're going to be in a surplus globally for oil, just full stop. Gold was flat, silver pretty flat, platinum flat. So the metals were all down a good bit and then kind of came back. So it was an interesting session for them, especially given the headlines. As far as rates go, the short end was pretty flat, up about 1. But 30-year up 5-6 basis points, 10-year up 3-4. And on the charts, those yields, it looks like they just on the chart, it looks like they could rip higher, but we'll see how that goes. As far as Max 7, like I said earlier, you had Apple, Google down about 1.5, Microsoft barely red, but Tesla down almost 7%, and it was down 7% for a good chunk of the day. So that really told the story. Nvidia down about 0.7, but as far as Max 7 goes, about the same as the market. If it wasn't for Tesla, maybe a little worse. But so there you have it. That's what the markets did. If you remember, honestly, probably for like the last month, I kind of kept just putting it out there like, hey, I'm bullish, especially because systematics have to buy a bunch. But there are a couple things that I'm worried about in July. And we even specifically talked about this specific week, I don't know, 3 or 4 weeks ago. And that's the potential headwinds around all these reciprocal tariff deadlines, the 90-day extension kind of going away, and what that could bring along with passing the reconciliation bill, which ends up giving you the debt ceiling increase that allows the Treasury to refill their checking account, otherwise known as the TGA. So we're there for both. The trade war is back, as we're starting to see unfold today, and the TGA is going to start getting refilled, which will be a bit of a liquidity headwind. So we're 1 day into this. Market's down 0.8. Not a big deal, but there's a part of me that feels like we're kind of whistling past the graveyard on the tariff side. So first and foremost, I'll rip through this. What we're seeing is kind of a two different, it's kind of a two-speed thing. If you go back and you remember April, we put on these reciprocal tariffs, which have frankly, completely absurd ways of being calculated. The market freaked out because of the levels of them, and frankly, because of the way that they were brought about, with that absurd math, etc. Market freaked out. Next thing you knew, we were in a 20+% drawdown. Markets panicked, and then the White House panicked and did the 90-day reprieve. And honestly, since 80 days ago, from my perspective, I've been kind of like, there's no guarantee that a lot of this doesn't come back in a meaningful way, right? Now, obviously, if the market freaked out again and you're right back down 20, 30%, my assumption is you get the taco trade back. But for now, maybe not, right? And like I was about to say, we have two tracks, and that is one, like, hey, you were working with us. We were trying to get a deal done. It just didn't work out. So here's your new tariff number, and that will come on in August 1st. Now, that is super important because that's 3+ weeks away. That gives, Japan, Korea, et cetera, pretty decent amount of time to still cut a deal to get their rate lower. But as of now, for those countries, you have Japan at 25% tariff rate, starts August 1st. All these I'm about to say start August 1st. You have South Korea, also 25, Malaysia, 25, Kazakhstan, 25, South Africa, 30, and then Laos and Myanmar, 40. That doesn't really matter because we don't really buy much stuff from them. But South Africa, that matters a lot. We buy food from them, a lot of citrus, obviously platinum, palladium come from South Africa. And I can't remember if they have a carve out on those, but if they don't have a carve out from that, that's a big deal, especially for the automotive industry. Kazakhstan is the biggest exporter of uranium in the world, but we don't really get most of ours from there, so probably not a big deal. Now, Malaysia, South Korea, Japan at 25% each. To me, that's a huge deal. We buy a lot of very important things, especially from Japan and South Korea, and things that are in the middle of supply chains. So not necessarily finished goods or raw materials, but things that our manufacturers used in their manufacturing process to make a product. So you could see goods prices really jump on that if that were allowed to live for 3 months in the economy. Now, again, you could still get a deal cut between now and August 1st. So that's worth kind of putting a mental pin in and not panicking on at the moment. More to the point today, in my opinion, perhaps is, although 25% on Korea and Japan's, that's a huge deal. Market's so used to big tariff numbers at this point, I don't think it even cares. But that's a big deal. That would mess with the economy in a very real way. But there's other countries that weren't in big negotiations with us that just had their tariff slap back on it, and that comes on Wednesday, on July 9th, when the 90 days ends. It's just like, look, we're not even in negotiations with you. This is just your number, and the number goes back to the old number. So here's this number we all thought was crazy. It was worth the market selling off 20%. Well, it's coming back on, and no one cares this time. So we have, I'm not going to read all of these because, does Algeria and Angola matter? Probably not a lot. But we buy a lot of stuff from Bangladesh. That's 37%. We have Cambodia at 49. Obviously, China is stuck at 34. Like that's kind of already a side deal, but that is a massive number. So it's not something to sleep on. So we have, let's see, Iraq at 39, Israel 17, even though they were happy to drop their trade barriers. We have Jordan at 20, Norway at 16, Pakistan 30, Philippines 18, Thailand, I think 36. That's a pretty big deal. As of now, we have the EU still working, and they're making it sound like they think they're close to like at least a structure for a deal, which is kind of funny because that was the one that everyone thought we couldn't get done, and yet we had a lot of others that couldn't get done, especially the easy ones that were supposed to be simple, and there are friends in Korea and Japan that did not get done. But if a lot of this stays where it's at, you're talking about the effective tariff rate, over 20%, which is nice from a revenue side standpoint. But as far as what it does to inflation and growth, at least short term, I think it'll be a pretty significant issue. So, right when everyone has jumped into the not having to worry about a recession camp. If we put a lot of these back on and they stick, let's call it into December. Let's say a lot of this is still around into December. Then I think you start to have a pretty significant problem, a headwind, a slowdown, however you want to look at it. But there's still plenty of time, plenty of room for negotiation for the non-reciprocal countries, the ones that got the August 1st deadline. And we still have to get news on a few other countries.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
And then we also had today or this weekend, I can't remember at this point, President Trump threatened, and this, no one knows how this would work or anything, so just a headline, but anyone that was cooperating with BRICS on anything that hurt America would get an additional 10%. Obviously, we don't know exactly what that means. BRICS has like a bajillion countries in it. They don't really do any legit policy that matters. So I don't know how, enforcement on this would look at all. But just something to kind of keep in the back of our heads that, let's say Malaysia signs on to something that upsets the administration when it comes to BRICS, then all of a sudden Malaysia's at 35%. Things like that could be, somewhat big deal at some point. My read on this is that the market should be down more than 0.8 today. Personally, my view. Now it's a sleepy, tired week where not much happens in the market. Probably not a lot of people even read this news today. But it matters to me. It's something I'm going to keep an eye on. How the August 1st deadline kind of comes to pass is going to matter to me. I think it's important to note that I think the market was right to freak out back in April. It was right to rally back whenever we got the 90-day reprieve. But my view is that if we kind of end up in a place that is not very different at all from that reciprocal, Liberation Day, let's call it, from that point forward, if we end up with numbers that are really, really similar to that, and even the countries getting deals like Vietnam, I mean, they're probably going to be 25, 30%, on average in the end, like that's still really high. Which to me, if I'm, Korea, what's the point of me jumping through a whole bunch of hoops to get down to 20% when, Vietnam backed off of every trade barrier they had and they got 20. In reality, it's going to be more like 25, 30 again, because of the 40% overhang for things that come through China. I'm not sure why anyone would bend over backwards to cut a deal at the moment, but point being, though, we might end up pretty close to Liberation Day levels that everyone partied on because we said we're not going to do that. I think I made this argument back at the time, like, hey, 90-day reprieve does not mean they're gone forever. And here we are. They're coming back. A lot of these, are we going to negotiate with Botswana for their 38%? We are not, right? That's just what that's going to be. And we went after a lot of kind of third world countries with huge numbers that they're just not going to import anything from us anyway. So we're just going to lose their imports that some may or may not be nice to have. We're just going to lose them for no other reason than they don't import stuff from us that they're never going to anyways because they can't afford to. And as far as the TGA refill goes, that really hasn't begun yet. That could be soon. So I kind of had this view that, until late summer, early fall, the market should be fine. Like, because you're going to have vol control in there buying a bunch. And I guarantee a big part of the reason today we only were down 0.8 was because vol control is in there buying. So they're kind of systematic inflows are dampening what could become, real people's outflows. So the computers are buying while the people are selling because the people know this news, and, the vol control could care less. Doesn't know what news is. CTAs don't know what news is, like, et cetera. So unless you get a nasty expansion in vol that forces vol control and all the other systematics to back down, it's just going to be difficult to overcome this. But I think this, at least at this current trajectory, and hey, I freaked out last time, and next thing you knew, we got the reprieve and everything was fine, right? So maybe I'm just overreacting yet again to the fact that this is all coming back on, and this time perhaps a little stickier. But But my view now is more towards like being a little more cautious for call it July and August than I was July, August, September. Honestly, I was coming around to thinking, especially July would be fine, probably August, maybe even September. And now you can speed up my caution all the way to now. I think you get a couple more headlines that don't work well or things along this nature, and you could have problems. And maybe most importantly, if this were to combine with a hot inflation print or two or three, then the market would freak out, because then the market would be like, oh, okay, well, tariffs are maybe a little bit inflationary, and all the tariffs rates just went back up. Like, this is not good, because then the Fed has to instead of everyone thinking the Fed's going to do a bunch of cutting for the next 18 months, markets have to go back to pricing that out. And the Fed has to go from wanting to be helpful to backing, not being helpful, not doing any cuts. So just a bunch of stuff to consider. And my position has gone from markets are going to be fine until late summer, early fall, to markets deserve more discretion, more like hedging probably in the early to mid part of the summer now than we thought before. But we'll see. Maybe the rest of this week vol control buys so much that the market ends up kind of flattish, or enough people read this from the beach and go and play some trades that it begins to matter, and it does enough to vol to trip up all the systematic flows. But to be very clear on that, like, systematic flows have not rebuilt themselves to like a really high stock level. So from that standpoint, like the nasty 20% rip lower we had back in April, it's going to be difficult to have it that much, because everyone was over their skis. Everyone was full positioning wise back then. Just not the case at the moment, to include retail. Retail has been actually pretty cautious the last few weeks, it looks like. So, which is interesting, could be another win for retail. But yeah, just a few thoughts I had. We'll see how it goes from here with news and data flows and everything that comes along with it. But I am more cautious than I was Friday, given the tariff backdrop. And again, duration of this, whether it lasts into fall and into early winter, with these numbers at or near anything around here, and I think you start running into significant growth problems. That's it for me today. Hopefully it's a little lighter note, something more uplifting tomorrow, but we'll have to see how it goes. That's all I had. Tomorrow we do get the small business survey, which might be somewhat interesting. But yeah, more for me tomorrow. Y'all have a good one. Don't forget, you can check us out at knowyourriskpodcast.com. Go watch us on YouTube, and check us out on Instagram, InstaFace, everywhere, but LinkedIn. All right, cheers.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC-registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.